Well, I think in the earlier presentations and clearly shown, there's a certain difference in the dynamics in those markets. Without a doubt, you've seen some of the growth in the Netherlands. You've seen the cyclical aspect that the Dutch markets have compared to the stable elements of the Brussels market. Those clearly drive decisions that real estate players take. Currently, I fully underwrite what Alexander was saying. There is a huge potential in Brussels, but it's not being exploited, it's not being promoted, nor has it been captured. Whereas if you look to the Netherlands, you clearly see those movements. You see a market where you can play a cycle, where you can look at rental growth, where you can have those discussions. If you look to Brussels, you see a very stable rental market. You see very limited to no, and if you would then even look at further compensated by inflation and other aspects, might even talk about negative rental growth over the long term. So those are aspects that definitely drive that type of decisions and make those markets completely different. On the other hand, I think the advantage of Brussels is it has a very mature market. It's a large market. It offers, and I regret to see that there's quite often competition between a CBD and a periphery, and those markets should offer the potential and the volume for every player in this market to be present. If you look to Holland, you have a much larger area, being the Randstad area, where you see areas being innovative. The Hague, for instance, as being a center where the legal system is deployed, is growing. Rotterdam, again, moving in its own specific way, whereas Brussels offers very much of those aspects within a perhaps smaller surface, but definitely with interesting capacities.
We already are realizing that the Netherlands and Belgium are two different markets with perhaps different speeds and different tactics how to handle foreign investors, how to attract them. We have to realize that Belgium itself is basically constituted of three different economies or markets, being Flanders, Brussels, and the Walloon region. That's very often understated, but there are clearly differences. For instance, the Belgian export, 83% of that is delivered by Flanders. So you have to, as an institutional investor, foreign investor, you have to take that into account. And what Alex said earlier is that you have to be local to be successful in both the Netherlands and specifically in Belgium, we believe. So you have to capture local players and be willing to invest in local teams to get the most out of the market. What we should realize is that if you look at the Benelux, two of the three main ports in Europe, being Hamburg, Rotterdam, and Antwerp, two of them are situated in the Benelux. You have a very high population density, so you have short distances to various markets. You have a high purchase power. Very often they say Belgium is poor, but the Belgians are rich, so there's very high purchase power in the Benelux. You have a very well-skilled, educated labor force. So all these things, I think, are a little bit underappreciated by foreign investors. And if you take the effort to go local, I believe you can do some very good sound investments in the Benelux.